John, what is your observation of markets completely linked to the press releases of stimulus?
I think the behavior of markets is reflecting an optimism that there's going to be big stimulus by January. I don't think it's necessarily a faith that Pelosi and Mnuchin and McConnell are going to agree to anything substantive by Pelosi's deadline of today. I think it's more sort of a look-through dynamic where the assumption is there'll be a Democratic sweep. There'll be something on the order of $2 to $3 trillion in terms of stimulus, and that's really going to keep the U.S. economy delivering above-trend growth. I think that's really why you see stocks like the Russell 2000, the small cap index at new highs for the year. It's reflecting this optimism on domestic stimulus pretty soon.
Mr. Netanyahu making comments in the Middle East here. We'll see if we tune into that in a moment. We'll continue with Mr. Normand as we monitor the events. John Normand, I look at the stimulus and the pop here. What is the JPMorgan estimate of where GDP is right now?
Right now in Q4, it's extremely early days, but it's probably going to be a 3% quarter. I mean, that sounds like a major step down from the 30% pace it was in Q3, and it is a huge step down. But the point is, it's still above trend, and I think if it's going to be above trend, then you're going to have something decent in terms of earnings delivery, and you're going to have support for markets. But there's obviously wildcard risk around this. I think we're assuming that something positive is going to happen in January. That's going to keep expectations pretty high in markets. But if nothing happens in January in terms of big stimulus, I think you could see a consumer retrenchment, well before that date, and a much worse outcome on the economy and on markets.